Your financial product moves money across multiple systems: payment processors, banks, digital assets, custodians. Each holds its own records, its own version of the truth. But you don't. Without a single source of truth, tracking funds, reconciling mismatched timelines, or producing a clean audit trail becomes a manual, error-prone process stitched together with spreadsheets and logs. Formance is a programmable core ledger that unifies every system money touches. Build a complete chart of accounts, connect your financial infrastructure, and instantly trace funds across the payment lifecycle with a full audit trail and no manual reconciliation. Formance, the unified ledger for the hybrid economy. Find out more at formance.com.
The 2026 Chevy Equinox is more than an SUV. It's your Sunday tailgate and your parking lot snack bar. Your lucky jersey, your chairs, and your big cooler fit perfectly in your even bigger cargo space. And when it's go time, your 11.3-inch diagonal touchscreen's got the playbook, the playlist, and the tech to stay a step ahead. It's more than an SUV. It's your Equinox. Chevrolet. Together, let's drive.
Welcome to Fintech Insider Insights from 11FS. I'm Kate Moody. In this episode, we're revisiting loyalty, but through a very different lens. Last year, we explored what loyalty means in financial services and how fintechs were reinventing it. But since then, no surprise, the landscape has shifted. We're seeing something unexpected. Not everything in fintech is moving forward in a straight line. In some cases, we're seeing a return to older ideas like physical branches and human interaction, while at the same time, fintechs are doubling down on premium experiences and lifestyle ecosystems. So what does that mean for loyalty? Well, today's conversation is inspired by an article from our guest and my colleague, Rosie Lee, who argues that what we often call loyalty in financial services isn't loyalty at all, it's inertia. And as switching becomes easier and customer expectations evolve, that inertia is breaking down. So the question becomes, how do financial institutions move from passive retention to active loyalty, from inertia to advocacy? First up, we have Rosie Lee, Senior Customer Strategist at 11FS. Rosie, great to have you with us. Would you mind giving our listeners a quick reintroduction to yourself, please?
Yes, hello, I'm Rosie. Excited to be here. I'm Senior Customer Strategist at 11FS and really excited to get into this discussion around loyalty and especially how banks and financial institutions can cultivate it with their customers.
Awesome. Well, yeah, thanks for joining us. Next up, we're joined by Jas Shah, fintech consultant and author at Fintech Under the Hood. Big welcome to the show, Jas. Again, maybe remind our listeners who haven't come across you recently. What's your background? What are you working on at the moment?
Oh, great to be here. I call myself a reformed engineer, although I wrote code for about a year and then packed it in. But I've been building products in financial services for nearly 20 years. Half of that has been traditional financial services organizations. And then the past 8 years has been helping fintechs build better products, from neobanks, PFM apps, to scaling a lender and working with various banks. And at the moment, I'm advising a couple of fintechs, a couple of early stage neobanks, ironically, and a couple of wealth tech platforms.
Awesome. Well, I'm very excited to pick your brain, so thanks for taking the time to join us. And we have a very welcome return for Alex Johnson, founder at Fintech Takes. Alex, again, I'm sure you'll be familiar to lots of our listeners, but for any that haven't come across you, would you mind introducing yourself and your work at Fintech Takes, please?
Yeah, absolutely. Thanks for having me back. Alex Johnson, I write a newsletter called Fintech Takes that analyzes the intersection of financial services, technology, and public policy. So topics like loyalty and inertia come up quite a bit. Have worked in and around fintech for the last 20 years. And very excited for today's discussion.
Awesome. Well, we've got a fantastic panel, so let's dive in. Rosie, it probably makes sense to start with you. So in your article, you describe loyalty in financial services as engineered persistence, which is a kind of provocative way of framing it. Maybe you could kind of explain to listeners what you meant by that.
Yeah, so I think with engineered persistence, what I'm referring to is this idea of getting a customer to consistently and repeatedly choose your product or your service over others. So I feel like the article was more kind of looking at it less from the customer's perspective and more from the brand or organization, and just thinking, how can you manufacture that engagement through repeatable actions? And I guess the question is, what can you do to ensure that your customers become and remain engaged? And what can you do to understand their needs and meet their needs over time so that they consistently choose your product or your service over others? And I think the problem is that historically banks and financial institutions haven't necessarily been very good at this. I think other industries are better at embedding themselves within customers' daily routines. And I think a great example of this is Amazon Prime. The customer's paying a subscription, they feel more compelled to buy the product to get their money's worth. They're bundling lots of different products together within one platform. So it's removing that friction, making it easier for customers to make the decision to purchase from there. And I think it's more difficult for banks and financial institutions to be able to do things like this.
Yeah, no, absolutely. Alex, from where you're sat, do you think fintech has actually improved loyalty, or is it just that switching nowadays is a bit easier?
Yeah, I think that's a good question. I mean, my read on it is I don't think that fintech companies have discovered like a magical secret to loyalty that banks or credit unions didn't know about. I think it's more just sort of how intense your level of competition is. And so, in banking for years, there was just very little competition. Historically, I know we're going to talk about branches, but historically, distribution in financial services was determined by physical footprint. And so you might worry about a customer walking across the street to the other bank that's in your same geography that you compete with every day. But apart from that, you didn't worry too much about it. And I think fintech companies, by virtue of coming into the market, by virtue of not having a branch or a physical footprint for the most part, they've had to be much more active in trying to take customers away from banks. And I think that has built up a different set of muscles. I mean, building on what Rosie was saying, I think one thing that fintech companies often mistake for loyalty, and it's correlated, but it's not exactly the same thing, is engagement, right? How many times does a customer open my app on a daily or weekly basis? Monthly active users is a very, very common and important metric among fintech companies. And I think that can, in some cases, be a proxy for loyalty, and maybe even a better one than some of the metrics that banks have historically used to measure how well their customers get value from their services. But I also don't think engagement is loyalty. And I think sometimes it can actually get crossways with loyalty or the value you're supposed to be delivering to customers. So I think it's a measure of competition and what metrics you use to assess how effectively you're competing in the market.
Yeah, I think it's a phrase, like the word loyalty, I hear in so many conversations, and I feel like every single organization I'm having that conversation with has interpreted it in a completely different way. And as you say, Alex, like tracks it via different metrics and measures. I mean, Jas, when you're obviously having lots of conversations with different organizations, how are the companies that you're speaking to defining it? What is it that they understand loyalty to mean in the modern world of financial services?
I mean, it's a great question. I think I would say that loyalty in financial services is very different to the loyalty, let's say, Alex has to a basketball team, or that I have to my beloved Man United. So I'd say I think loyalty in financial services is not lined like that type of loyalty is, and it's more tied to fair value exchange and trust over an extended period of time. And the fair value exchange is usually the financial services organization providing a helpful product, giving fair associated costs, giving good customer service, and an overall good experience. And in the past 10 years, that has now included that experience has included a digital touch point. Again, to Alex's point, I think people are measuring loyalty as engagement or lack of churn, but those are quite poor measures of loyalty. I think true loyalty, I think we see the FCA commission a survey every year. I think they interview 1,000 customers and ask them if they would recommend their bank to a friend or a colleague. And I think Monzo and Starling top those two surveys for the past 3 or 4 years running. I think that's a good measure of loyalty as to whether you would recommend your bank to someone else and to almost put your neck out and say, yeah, actually, I would say that my friend should join this bank, or my family member should join this bank. I think that's a better measure of loyalty than churn or daily or monthly active usage for me.
Alex, what do you reckon? Do you think that's a better measure? Do you think that's a better measure, or would you look at something else?
No, I do. I agree. I think, going off of that point, I just think that one of the challenges that we have to overcome in this space is differentiating, and this goes to the piece that Rosie wrote, between inertia and loyalty, right? Like, is someone actively making a choice? And to that exact point, if you recommend your bank to someone else, you are making an active choice. You're taking a risk, quite frankly, as a customer, right? Like, no one wants to recommend any type of product or service that the person they recommend it to is going to be disappointed by. And so that is actually taking a risk. Logging into an app on a daily or monthly basis might speak to the utility or perhaps addictiveness of the product, but it doesn't speak to the customer taking a risk or making an active choice. And so I do agree. I think that you have to evaluate almost like higher stakes opportunities that the customer has to show you that they're choosing your product or choosing to take a risk on behalf of your product, as opposed to just sort of continuing to use it in a sort of mindless fashion, which I think, quite frankly, is how a lot of digital products these days are used. Is just inertia, habit, the sort of addictive quality of knowing where on your phone to click every couple of hours. Like, that is very different than making a conscious, active choice.
Yeah. I mean, Rosie, you interview tons of customers all the time, right? Like, when you speak to those customers, how do you think they are exhibiting loyalty, or what do you see?
I love the points that both of you raised. I think, historically, banks haven't earned customer loyalty. They have benefited from the friction of moving. It's been difficult for customers to move bank. The admin involved is cumbersome. It's easier now for customers to switch. And we're seeing customers move banks much more often because it's much more easier for them. But I think, to be fair to banks, I think loyalty is harder to gain in financial services for two reasons. I think it's hard to embed within people's daily routines, and I think it's hard to create a sense of identity and belonging. And I think another thing that goes into the point on the referrals is I think that customers don't actually want to engage with their finances. I think a lot of it, customers want to think about their money as little as possible, and this actually makes it hard to measure loyalty, or you shouldn't be measuring loyalty as engagement. I think a lot of customers want to, they go out, they spend too much money on a night out, they don't want to look at their bank balance the next day. And I also think the other reason is that, which Jas touched on, is that customers need to trust their bank, and that their bank is going to keep their money safe and secure. And I think that they care about this more than anything else. They don't care about whether they resonate with the colours that their bank is using. And I think that this makes it harder for banks and financial institutions to create that sense of loyalty, because it's harder to speak to a customer, speak to an in-group, create that sense of identity and belonging through the bank. So I think that they have to lean on other ways of speaking to customers and getting them on board.
Jas, we're seeing a bit of a back to branches, trend. I don't know if it's trend. Certainly we've seen like some announcements, right? So do you think, is this a step backwards or forwards in terms of loyalty, do you think?
I think it's a nothing step, to be honest. If you look at the net change in bank branches that they're talking about, they're still down by 500-600 branches in 5 years. So they're at around 220 branches at the moment, and they're saying they're going to open a few more up, but they've closed 600-700. So I don't think it's a step back. And I think, again, to touch on both Rosie and Alex's points, I think historically, if you say historically the past 15 to 20 years, I think banks have been slightly out of touch with customers. It's difficult to build loyalty in an internet banking and mobile banking era. But prior to that, in my parents' generation, I think they had great touch points. They were embedded into everyone's daily or weekly routines. My parents would go to the bank once a week to deposit checks or deposit cash, to look at bank statements, and they would usually fold this in with a meeting with the branch manager or their personal relationship manager. I think this is what Barclays are trying to reclaim, and they're trying to reclaim that touch point. I spoke to someone at TSB recently, a kind of seniorish exec, and he used to be a teller, and he basically said, look, they would tap us up for their customer insights because they would be the face-off, they would be the touch point with the customer. They would understand inherently what every single customer's needs are during the week and month, and they would literally have forms ready for the customer. Next time the customer comes in, they would say, oh, here's a form for a personal loan. I remember you saying that you wanted it or you were thinking about it. Here's the form. I've already filled out some of the details for you. There you go. Like, fill out the rest. So I think they have had good interactions with customers and historically been good in understanding their customer base. But there's been a big gap. And I think this is what they're trying to recoup. I think they're trying to recoup it in the wrong way. I don't think people are going to go back to branches. I have no bank branches on my high street at all. They've all closed down. Some of them have turned to coffee shops. Some of them have turned into estate agents. I think it's the wrong move. I think a better move would be to recreate that personal relationship banking experience in the app itself, because it's just a bit more cost effective, and it's the shift that has been made with the rise of Gen AI. I think people are used to conversational banking, but I think they'd be better off spending that money on that rather than this marketing stunt, which is what I'm calling it.
No, it's. I think it's a fair call. I mean, Alex, like Chase is opening 160 new branches across 30 US states this year. Are we seeing a radically different picture over in the US, or are you as cynical as Jas is?
No, I mean, I think there's definitely truth to what Jas is saying. I think, with branches, there's this sort of core point you have to make about the folks who run big banks, which is they may be lazy at times, but they're not stupid, right? And the reason I say that is that the laziness comes from competition. And so if you're not in a highly competitive environment, you're going to sort of take your foot off the gas. You're maybe going to make some decisions that are somewhat suboptimal, but hey, you can afford it. And there's not really a lot of risk that you're going to lose your customers in a highly competitive environment, which I think we have today in multiple countries, including the US. Then you start to see bankers re-engage very actively, and they are smart and they know what they're talking about and they've studied the numbers, right? And so when you talk to folks at Chase, for example, what they will tell you is, we ran the numbers, and while we don't necessarily want to increase our branch density in markets that we already dominate, right? So Chase isn't really looking to open up that many more branches in New York, for example. They do see a strong correlation between organic growth in deposits, in private banking and wealth management, when they open up new branches in markets where they're not as deeply penetrated. And so Chase has embarked on a massive investment across multiple regions in the US to expand via branches. And that doesn't come at the expense of them building out additional digital capabilities. They're Chase, they're the biggest bank in the world. They can do both at the same time. But, I do think it's an interesting sort of hypothetical question, right? Because you go to fintech companies and they say, our model is different, we're low cost, we don't carry that same branch infrastructure. And so we can translate that into lower cost, more competitive services. We can reinvest more in digital. It's a better model. We're a software company, not a bank, blah, 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 blah. If you caught them in a moment of honesty and said, hey, I'll let you pick any 10 branches that a traditional bank has, and they can become your branches tomorrow. And you don't have to pay for them. All you have to do is staff them. Do you want that or not? Every single one of them is saying that they want that, right? Because branches and a physical presence in the communities you're serving does have a value. That value has changed. It's not transactional the way it used to be, right? To Jas's point, I don't go into branches, but we also know from survey data that people still decide on which banks to work with and which banking service providers to trust based on cues like what communities they're in and physical proximity to branches. These things matter. And, the way in which they impact customers' decision-making, again, is shifting as other channels come into the mix. I think, to Jas's point, and AI is going to shake this up a lot, right? You might not need to have the same human-to-human conversations if you can have a conversation with a bot that gives you an approximation of a human conversation. But physical spaces are still important, and I don't think you can say definitively that every bank that's building new branches just doesn't know what they're talking about and needs to invest more in digital. Like, they know about digital banking, they know about ATMs, and they see branches as a part of their strategy that's additive to the whole.
Yeah, I completely agree. I think I've referenced it a couple of times on the podcast, but I did some customer interviews sort of early part of this year that actually I think I found quite really resonated with me, because we were interviewing people that were paid customers of mostly digital neobanks, digital banks. So these are people that were really engaged with these digital banks. So they've paid for Revolut Ultra, or the top tier of Bunk, or new banks, premium customers, et cetera, et cetera. So these are really engaged customers, but without exception at all of them still had what I would see as loyalty to a traditional bank with a bank branch. And when we kind of poked beneath the surface of that, a lot of it was about, I think, having the confidence that if something goes wrong, there's somewhere I can go. There's like I'm not just going to be stuck talking to a bot. I can physically drive in my car to somewhere and bang on the door and until somebody, a physical person, comes and speaks to me. And I think that's huge.
Yeah. There's people working at that place, right? I mean, I think it's a great observation that customer service is still really important. And maybe that's kind of the core point in some ways to this, is that, when it comes to your money, you mostly want to interact with it. Like happy path, things are going well, I'm executing transactions, I don't want to talk to a human being. As soon as it goes to sad path, you want to be able to get as quickly to a human being as possible. And you even see this with call centers, right? When someone has a routine transaction or question, they'll tolerate IVR and automated voice and interacting with it and trying to get an answer. When they have a problem, they will yell into the phone, I want to talk to a human being, over and over at the IVR until it gets it and transfers them to a human being. And so I do think there is something to that. And we've actually seen, at least in the US, a number of bad customer service outcomes happen with fintech apps where customers discover, oh, the only way I can communicate with this fintech company is through this chatbot. I don't even know if there's a human being behind it. And I just keep getting these circular responses that aren't coming back to helping me with my money. So yeah, I mean, this goes back to a point Rosie was making. Financial services is tricky because for the most part, you don't want to touch your money or think about your money. You just want it to be on autopilot. But there's this real strong sense of when something's wrong, I immediately need resolution and I need to trust that I can get it. And I think branches are one manifestation of that need.
I think it goes into the need as well to not have one solution for the masses. And actually, if one person wants to go into a branch and one person wants to just use AI, then there needs to be that option there for them that suits their needs. So just having one solution, and I think it also goes into this idea of removing all friction. I think we've been so focused on making these seamless, quick, easy interfaces and experiences, but sometimes that's not always the ultimate goal, especially in financial services. There needs to be some friction. There needs to be some choice. You need to enable the customer to stay safe and choose the right option for them.
Yeah, absolutely. Okay, we're going to take a short break, but when we come back, we're going to be exploring even more about how financial institutions can actually build real loyalty through identity, belonging, and becoming part of customers' everyday lives.
Over 40,000 businesses across Europe trust Pleo to manage their spending. Now, platforms like yours can offer Pleo's capabilities, cards, spend controls, and real-time visibility directly to your SMB customers under your brand and integrated with your product. Pleo Embedded allows platforms to unlock a new revenue stream quickly without building from scratch. Solve your customers' biggest admin headaches, become indispensable, and earn every time they spend. Visit embedded.pleo.io to find out more.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Welcome back. In the first half, we explored how traditional loyalty is breaking down as inertia disappears. So now let's look at what we think replaces it. Alex, what do you think? We talked a little bit about fintechs maybe focusing on some of the wrong metrics, maybe just focusing on engagement too much. Are there any fintech brands that you think are successfully starting to build loyalty in different ways? Which ones do you think are doing the best job so far?
Yeah, no, I definitely think there are. I mean, I think the key thing that I notice is with brands that build loyalty, they make hard choices about what problems they want to solve and what customers they want to serve, right? So I think a key point that we need to sort of hone in on is that if you try to build loyalty with everyone, if you try to be the bank for everyone, you're not going to end up with any loyal customers, right? Everyone's going to sort of feel about you at best. Whereas in fintech, I think one of the benefits of being a disruptor that's trying to take a small share of market away from incumbents is that you can focus very specifically on a segment of customers. I actually see this more in the B2B space than I do in the B2C space in fintech. In B2B, there's a lot of movement towards like verticalized solutions, right? So we are the financial services provider for healthcare companies. We are the verticalized financial service provider for doctors. We are focused on like a very specific segment of the market. And that focus allows you to not only tailor your product from a functional perspective, because people in different circumstances have different needs, businesses operating in different verticals have different functional needs, but it also allows you to convey to them that you are focused on them specifically and you care about them specifically. And I think that message really resonates. In a lot of ways, it's kind of a return to the historical roots of how banks and in the US credit unions used to work. Like you had a specific community or a specific field of membership that you were focused on. And that created a very strong sense of loyalty and a bond. And I think in fintech, we're slowly discovering that you can replicate that. And this goes back to Jas's earlier point, in a digital context, right? A lot of these ideas can be translated from a physical context to a digital context or to a hybrid context if you want to do both channels. But it's about that focus on a very specific segment and really honing in on their needs.
Yeah, I think those B2B examples are so interesting. For some reason, I always think about hairdressers. I don't know, like the doing hairdressers. Every single website seems to have like hairdressers on. I don't know why. But I think again, it speaks to another particular opportunity, but also challenge for financial services in that like money is connected to everything. And so to my mind, like loyalty is about a sort of customer having a gut sense. So just going back to Jas's original example from like how his parents used to bank, like you probably go into that bank branch having just a gut sense that they wanted to help you. They wanted to help you do stuff with your money that made sense for you and helped you to kind of manage your money in the best holistic way that made sense for you or your family or your household. Like they were kind of looking for opportunities to help you with things and make your life easier. And in the world of financial, maybe in the world of music or film or whatever, or healthcare, like maybe that's got slightly more of a container around it about like how far that can stretch. But in financial services, like money connects out into every single other part of your life. And so I think in theory, a financial services provider could help you to, reduce the outlay on your house renovation, or they could help you to kind of manage the costs of your healthcare, or they could help you to manage your child's educational costs. And all of those things take you down a rabbit hole of how far do you want to help somebody? Which I think, again, is a really interesting challenge for loyalty. Like if you're trying to build a sense for a customer that you're a brand that's going to really just have your interests at heart and help you and make your life easier and simple, how do you set the bounds to that? So I think, what you're saying, Alex, about picking a customer group and almost defining how you're going to help them and how far you'll go is really key, because otherwise, like, where do you stop? And I suppose this is a challenge. Maybe like we haven't talked about super apps yet, but maybe this is a good time to bring them in.
I think that's right. I mean, I think that the point you make is exactly the right one. Like, how far do you chase a problem for a customer down a rabbit hole before you sort of stop and say, this is not really our job? And it's interesting because if you think about, I always think about like fintech as sort of reinventing private banking, right? Because private banking is like the ultimate banking experience. It's having a human being who you can call at any hour, day or night, and give any problem, whether it's financial services or not really financial services, and they'll just go, yep, I got it, and they'll fix it, and they just take care of it for you. And I think like we can sort of naturally extrapolate on the idea that every human in the world wants a private banking experience. Most of them can't afford to have a human doing that work for them in that obsessive way, but we can scale that with software, right? And so to your point, I think one of the mistakes that fintech companies make a lot of times is sort of drawing the same boundaries around their products that banks have historically drawn. Like, oh, well, a credit card doesn't really do that, so we can't do that. Why not? Why can't you do that, right? Like the customer's trying to solve a problem. The customer's not trying to get a loan or a credit card or a deposit account. They're trying to solve some larger problem. Can your product grow to fill that space and solve 100% or close to 100% of that problem? And obviously, Kate, to your point, you can't do that for everyone, right? Like if you were chasing that rabbit all the way down the rabbit hole, you can't do that simultaneously for all of these different problems. That's what requires the focus. And so the trick is, how do you hone in on a set of problems that you're going to try to own as much of the solution to as possible? To me, that engenders loyalty rather than just stopping and going, that's not really our job. You have to go fix that yourself.
Yeah. Jas, what are you seeing in the organizations you're working with? Are they chasing all the way down the rabbit hole?
No, I agree that they're not, because they can't. There are constraints all across the board. If you want to go expand to a new customer group, you have to first go do the research and figure out whether the problems and solution map to the same group to the same extent. There's resourcing constraints. Yes, they are becoming less relevant with the ability to spin up a team of people that are zeros and ones on a Mac Mini that can do that work for you, a fraction of the cost. But it's still a constraint. And I like the point you touched on, Kay. I think it's also how that's part of the differentiation. Is not just building loyalty. Is just not just a intent. It's you can differentiate by doing things differently. And we've seen there's neobanks in the UK that Monzo, for example, are the obvious one, that they're a bit more transparent with the way they explain terms and conditions. Their emails are a little bit more fun. That resonates with myself and one group, but it might not resonate with another group. So it's you can differentiate, you can grow loyalty by just executing the same product in a very different way and maybe communicating it differently. So there's a few ways of doing it. I just think, I don't see many going down the rabbit hole all the way, because I just don't think it's possible for most of the fintechs, especially the ones I'm working with. But there are some super fintechs, the kind of scale ups that are, especially the B2B ones, that do look like they're creating everything, like company setup, card issuing, payment processing, treasury capabilities, accounting, all of that stuff. They can do it, but I think for the consumer side, like Alex said, I think for the consumer side it's a bit more difficult.
Yeah. Alex, we haven't talked a lot about super apps, right? Which maybe feels odd in the context of loyalty conversation. Like lots of people I speak to kind of are really jealous of the super apps because they think they've like solved loyalty by just doing everything for all of their customers. Is that fair? Or?
It's funny. Everyone wants to provide a super app. Like, sounds like the greatest business in the world. We want to be the one app that everyone uses for everything. What we've found, I think, in a lot of more mature markets is that super apps don't really work because the level of competition across all of those individual jobs to be done is so high. And this goes to an earlier point, but like the friction of managing multiple apps has kind of gone away, right? Like it used to be really hard to go get vastly different services in different places. There was an inconvenience to that. That's why people used to only have one checking account. Now people have 2, 3, 4, 5 different like bank accounts that could function as your primary bank account, and they use them for different jobs. And I think on a small scale, that's kind of an illustration of what's wrong with the super app concept in mature markets like the UK or the US. It's just hard to convince consumers to accept a B- product within a super app when they could go get the A+ version with just one more click. And I think if you skate forward into the future a little bit, you start thinking about like AI. like agentic AI should be able to orchestrate all of this on our behalf. So whatever little friction remains from me having multiple different service providers, I should be able to have an agent layer sitting between me and all those different service providers that can stitch them all together. And so I think we are likely headed into a world where there's more sort of bespoke competition on each of those individual jobs to be done and less of the sort of super app concept. I think super apps worked at a specific moment in time in certain less mature markets where there was less competition, but I don't necessarily see them as the future in mature markets, even though I'm sure every provider, including large banks like JP Morgan Chase, would love to be the super app for their customers.
Yeah, absolutely. Rosie?
It's funny though, because I agree with everything that you just said. However, I recently got rid of my Amex and my Monzo because Revolut is giving me everything that it needs. And I never thought I would be a spokesperson for Revolut. But I love to travel. I love to, book holidays, go away, get eSIMs. And Revolut's doing all of that for me. It's got the hub. It's got the Rev points. So when you spend money, you earn points. You can then use those points to book a hotel. When you arrive at your destination, you can get an eSIM through the app and you use your points to get the eSIM so it feels free. I've got home insurance through them. I had pet insurance at one point, but then they removed it. And they've also got better interest rates on the savings pots than Monzo. So for me, it was it was a no-brainer. And I know that you've got to start, I agree with what you're saying about the super apps. But then on the other hand, if you can cater to kind of all of those jobs to be done or most of those jobs to be done for one person, then it could work.
Well, and I think to that point, that's a really, really good point. And it's kind of this question of, does every single thing that you do reinforce all the other things, right? So like, is the whole greater than the sum of its parts is kind of the question you have to answer. And I think this gets to the difference between sort of bank bundles, so to speak, versus the new sort of fintech bundles that we're seeing. Bank bundles were like, yes, we have a credit card, we have a deposit account, we have a home equity loan, and you have to talk to completely different parts of the bank that are run by different groups that have their own separate P&Ls, and they'll all talk to you sort of underneath our brand, and you might be able to log in to our online banking and be able to see all those products in one place, but that's the extent of the integration that we've done. And so it really felt like 5 different companies that all just happen to call themselves the same thing and roll up to the same executive management team. Fintech companies, by contrast, and I think, Rosie, you did a great job describing like an example of this, they're thinking more holistically about how does each thing that we add to this bundle of services that we have reinforce and make the other parts better. And I think that is an area where you can create more of a durable advantage and more stickiness, but it does require that sort of like whole company pulling on the same oar, working together to integrate those things. And the test I always think about is if you had an AI agent who was helping you optimize all the individual parts of your finances, and the AI agent came to you and said, hey, I know you get savings from Revolut, that's great, but I found an offer for an even higher savings rate if you go over here. Do you want to do it? If you have a really strong bundle, what you want the consumer to do in that moment is to overrule the AI and go, no, because I value the totality of everything that I get from Revolut, I want to stay there rather than get picked off on individual products that might be better on an individual basis, but the whole is less. That's the test you're going to have to pass. And it's cool that Revolut and other neobanks are starting to build towards that.
I think it circles back to your point around competition, Alex, because I think the reason lots of these value props have been created, I think Monzo created their perks package and added Greg's sausage roll once a month and a View Cinema ticket. And I signed up because I go to the cinema once a month. But I think it goes to the amount of competition in the market that Revolut have done some research and decided that based on all our customers, we think that building out a travel lifestyle prop with airport lounge access, which is becoming a much more desirable thing, eSIMs, which I've started to use more and more, and points that are interchangeable within a bunch more different products and not just limited to American Express services. I think they've looked at the market and realized that if we bundle everything together, it's much more likely that someone will stay. And over time, we will create loyalty because it's a matter of creating a value prop, trust, and then seeing that over a long period of time. And I think that's again, to all of your points, is what they're trying to do. And I think time will tell whether they do build true loyalty or not, and whether Rosie stays with Revolut for the next 3 to 5 years. But I think, if they improve that prop over time, I think that's a true test of loyalty.
Well, and I think that's exactly right. And I think the trick with doing that is you assemble the bundle, and then you have to not make it worse in pursuit of profit. And that to me is always the test that these companies fail is we built this great bundle, it works really well, but gosh, our margins could be slightly better if we just upcharge this, or if we swapped out this component of the bundle for a cheaper alternative, who's going to notice, and we'll have a higher margin. So there's this constant temptation, and you see it especially with public companies that have to answer on a quarter-to-quarter basis, but I think you see it even with late-stage private companies where fintech investors get a little bit restless. There's this pressure to make the bundle worse, and I think the discipline you have to have as an organization is saying, no, we're playing a long game. We want to build loyalty. Like, loyalty gets built over decades. Like, we want to build loyalty and trust over a long period of time, and the way we do that is by just never taking shortcuts, never trying to optimize profit over value to customers. So I totally agree, Jas, that's exactly what these companies are doing. The test will be, can they maintain the discipline to keep these bundles strong over time? And I think that's a test that many companies in financial services and outside of financial services have failed over time. And the ones that haven't are the ones that we all sort of glowingly talk about as these great, legendary companies that have been built. That's the difference.
Yeah, I think the time component to loyalty is fascinating as well. In a previous life, when I didn't work in financial services, I actually did some research on behalf of Nando's. I was going to say, where does Nando's exist? I mean, it's a large chicken-based restaurant in the UK and other markets, right? But when I was speaking to the kind of person I was working with there, they were saying like their specific aspiration was to kind of capture customers when they were teenagers going out with their friends for their first meal, kind of make that a really great experience for them, which is why they kind of had like a lot of specific menu functionality and payment functionality around just making that really simple, because they then had confidence that you would stay with them, albeit in a different frequency in different ways, but as you kind of progress through your life, then you'd bring your children back to Nando's and it all starts a beautiful circle all over again. And I kind of often think about that in the world of financial services, because we sort of we have historically seen a similar pattern, right? Where I still remember being taken down to a local bank branch by my dad to open my first bank account. And I would still say that I am loyal to that bank, as in I still pay my salary into that same bank account. And I'm really intrigued to see how this shifts in the new generation, because I have a 4-year-old. I think he can open an account. I think in most UK instances, I think the earliest age is 6. So that the time is coming up when I will have to decide where I open his account. And for me, that feels like personally just quite a big pivotal moment. But I'm seeing this kind of come back up to the awareness of big banks. And I think lots of big banks are starting to think about how do we capture the next, if we don't have as many bank branches, despite our PR campaigns, that we're opening loads more. Like if we don't have as many bank branches, we're not going to have that kind of physical moment of like starting a journey. Like how do we start the journey? So yeah, I mean, Jas, we're seeing lots of, I personally feel like we're starting to see more of a focus on shaping up propositions for kids to try and start this next generation of loyalty. Are you seeing something similar?
Yeah, I mean, if you look at Monzo, Revolut, and Starling, they've all got 16 to 17 products, and they've got under 16 products. I think it makes sense. It is almost ironic that they kind of have copied the traditional bank model, because, like you, I was hooked to the bank that I banked with when I was 15, 16. That I got a little piggy bank that they gave me. You'd put your coins in there, and then you'd have to take the physical piggy bank to the bank, and it was a whole experience. And I'm still with them technically, and I put my salary into there. So I think I think more and more people will do it because it does make sense. But then, yeah, to your point, I think the average age that people are staying with a bank is going lower and lower and lower. I think there were some stats I saw a couple of years ago that I think our generation, it's 15 to 16 years you'd stay with the same bank, and the next generation down is 10. And I think they're saying that it's going to become, the cycle times are going to be shorter. So that will work for 5 years maybe. So you have a 16-year-old have a bank account, and when they turn 21, that maybe there is some sort of cyclical marketing campaigns that happen from banks that specifically target that, 16 to 21. Like when you're 21, you specifically have a campaign that tries to switch people at that age with specific products, with specific propositions, based on age, based on things they're doing, maybe based on graduating from university or college, and they have specific propositions set up for that switching time. But yeah, it's a good strategy to start with. But again, maintaining a customer, keeping a customer is always way more cost effective than trying to acquire a new one. So acquiring them, great, but making sure you keep them, I think that's the more important thing.
Yeah, absolutely. Annoyingly, we're coming towards the end of our allowed time. So I suppose I wanted to allow each of you kind of a final say, I suppose, on, if someone's listening who is working in either a fintech or a large bank who's really trying to work out, like, what should I be doing to increase loyalty for my company? What would you recommend they focus on? Alex?
Yeah, I would say small wins is probably the way I would describe it. Loyalty is this huge, massive subject. It touches so many different questions and so many different parts of the business and so many different products. It really is the entire job of the whole company to think about customer loyalty. And if you try to solve it at that sort of galaxy brain level, you'll probably fail. And many consulting ships have run aground on that exact patch of land. So I would avoid that and focus instead on what's just a very small thing we can do that will be additive in terms of value to customers and show them that we care about them. And it can be the smallest thing in the world, but what I've found is small wins tend to compound, and an obsessive focus on just giving as much value to the customer tends to compound. And so small wins over time build momentum for larger initiatives. So just find some small place to get a win where you're like, I know for at least a segment of our customers, when they use this or they experience this or they call into the call center and have this conversation, it's going to dramatically increase how they feel in a positive way about our company. And that's a great place to start.
Yeah, absolutely. Rosie, what about you? What would your advice be?
I think that financial well-being is the ultimate end game. We're seeing some customers switch for cash bonuses if they don't feel financially secure, like they have financial well-being. They're going to go into a scarcity mindset. They're going to be more likely to switch to jump ship. So I think the ultimate end game that banks and financial institutions should be focusing on is financial well-being for their customers. And I think something we also haven't touched on is the idea of prevention. And this goes into discussions around AI, but AI is going to help to prevent things from happening before they happen. So instead of saying, I've seen that, this person has scammed you, let's try and get your money back, it's let's stop this scam from happening in the first place. So I think, yes, prevention and financial well-being are two big things to focus on.
For sure. And Jas, what about you?
I'm going to rant about Alex's point first because I love the small wins, and I don't like the idea of people talking about loyalty programs. I don't like the phrase loyalty program because it implies it's finite. It's a loyalty program, so we'll start it and then maybe at some point we'll end it. So I love Alex's point about small wins. I would say small wins, but think outside of financial services. Look at where loyalty works in non-financial services organizations. So, look at the strategy that Coke used when they put Coke fridges into people's shops and made them fill them with Coke, not Pepsi. Like, look at different ways companies over the years have kind of embedded loyalty into their products and services, and then try and transport some of that into your financial services product, and then go back in time again. I make this point every time I'm either on the 11FS pod or any other pod, to be honest, that probably the most personalized time of financial services was when people went in, spoke to a bank manager or a bank rep, bank teller, and were able to converse because they were able to learn about the consumer was able to tell them about their challenges, and there was a symbiotic need to kind of create value. I think people need to do more to pull that into the digital experience. I think, yes, AI might do that. Conversational input box might help, But I think just look to history. What were those moments? What were those experiences that really created loyalty? Again, to your point, Kate, that first piggy bank when you went to your bank branch. How do you recreate that in a digital age? I think look at those experiences and look at what's worked, and then try and transpose it into what we see today.
Yeah, no, absolutely. I think all fantastic points. I suppose the one thing I would add is maybe like, I think sometimes people are a bit afraid to kind of look at the commercials behind everything as well. Like, I think ultimately, if you are not set up as a business for it to make commercial sense for you to keep a customer for the long term, and if it's not going to be in a customer's commercial interest for them to be with you in the long term, then ultimately it's going to be very, very difficult for you to make the right decisions. It's very, very difficult for you to make, even if you make some of the right decisions and early decisions, it's going to be very difficult for you to maintain that throughout your roadmap as you develop your products and you broaden out your offerings. And I think, as we've covered, like, loyalty isn't a quick, like, I think the small wins thing that Alex talked about is hugely important, but you need like multiple small wins building consecutively over time, right, to build true loyalty. Like, loyalty isn't going to be built overnight. So yeah, I think kind of really think about that. Are the commercial interests of the business aligned to the commercial interests of the customer as well, as much as possible? I think that's also really key. On that note, that wraps up today's discussion. So I'm sure we could have talked about this all day, but sadly we've hit our time. Where can people find out more about you and what you're working on, Rosie?
Just LinkedIn, I guess. LinkedIn.
Awesome. Jas, what about you?
Yeah, a platform called LinkedIn, like Rosie said. I'm also on jasshah.substack.com under Fintech Under the Hood, and here on the 11FS podcast.
Yeah, you do excellent diagrams. Would highly recommend.
Thank you.
Alex, what about you?
Yeah, well, first, subscribe to Fintech Under the Hood. It's awesome. I am at fintechtakes.com, and I also am on LinkedIn and Twitter, so you can find me there as well.
Awesome. And you can find me also, unsurprisingly, on LinkedIn. I'm not on Substack because I'm not cool. But you can drop me an email at kate@11fest.com. Thanks so much for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make the show better and helps others to find the show as well. As always, if you want to join the conversation, just find us on social media. You can search for 11FS or Fintech Insider or email podcasts@11fs.com. Thanks very much. Goodbye.
Been out here all morning. Not a single bite. Guess the fish finally figured it out. Just like hackers do when Cisco Duo's on guard. With Duo's end-to-end phishing resistance, every login, every device, every user stays protected. No hooks, no catches, no bites. Cisco Duo. Phishing season is over. Learn more at duo.com.
Business owners, game day isn't just another shift. It's your biggest opportunity. What you show on your screens decides where fans stay. EverPass brings premium live sports together in one streaming platform built for businesses, so you can deliver the games your customers want without the hassle. Reliable, easy to manage, and designed for your venue. Make your place the one fans choose. Visit everpass.com to learn more.